All right, welcome everyone. Thanks for joining the DAO Treasury Management panel. So I'll do a quick round of introductions. So my name is Sydney. I'm the co-founder of Maple Finance, an institutional credit marketplace built on top of the Ethereum blockchain. Today, I have Auryn Macmillan from Gnosis. So Auryn is a former pro basketball player turned shadowy supercoder, building, advising, and investing at the intersection of governance, decentralization, and mechanism design. He's currently working on the Zodiac standard for composable DAO tooling at Gnosis, and in his spare time, he contributes to CLR Fund, a permissionless quadratic funding protocol for Ethereum codes. We also have with us today Shreyas from Llama. So Shreyas is the co-founder of Llama, who works on building blocks for DAO Treasury management. He's also an active contributor in many DAOs, including Aave, Uniswap, Gitcoin, and Friends with Benefits. We also have Sam Cassatt from Neptune DAO, a DAO that aims to invest in various liquidity opportunities in the DeFi ecosystem and beyond. He helps facilitate the strategies voted on and approved by Neptune members, and is also a founder of Aligned Capital and former CSO of Consensus. And then hosting today's panel, we will have Andrew Thurman of CoinDesk. So Andrew is a tech reporter who formerly worked as a weekend editor at Cointelegraph, was a partnership manager at Chainlink, and a co-founder of smart contract data marketplace startup. All right, with that, I think I will pass over to Andrew as our host for today.
Yeah, thanks, Sydney. Gentlemen, really excited to have you here. I think a lot of folks in the crowd are not very familiar with DAOs at all. This will be a very introductory panel, but I think that could be potentially instructive. I was doing some back envelope math this morning. I think everybody has been taken aback by crypto recently. Mainstream media, financial pundits were all shocked when crypto single-handedly stalled this infrastructure package. Total crypto market cap now well in excess of 2 trillion. We are bigger than Google, we are bigger than Apple, and we are threatening Microsoft at 2.2 trillion. Nobody expected us to get this big this fast, and in a sector that is widely misunderstood, perhaps the most misunderstood thing is DAOs. I don't think people really get what's going on there. Nobody in Congress can talk about it intelligently, certainly. So good you guys are here, good we're hosting a panel on it. Let's dive right into it, though. I want you guys, there are many competing definitions, and I think you all probably have different views on this. But roughly, in your all's mind, what is a DAO, and why and how does it differ from, say, a corporation or any other form of human organization? Auryn, let's start with you, and then we'll move clockwise around the table here.
Yeah, I think I'm gonna go straight into the second part of the question, kind of like why and how is it different. I think the biggest difference, in my opinion, is essentially what it kind of leans on for enforcement of its rules, enforcement of kind of how it operates. And so a traditional organization would traditionally kind of lean on a legal structure, lean on essentially the legal structure is provided by a government legislation in some jurisdiction, and a DAO kind of chooses a radically different jurisdiction in that it deploys at least part of its kind of operational rules onto a public blockchain. And so the thing that kind of mediates the interactions of its participants, at least for some part of it, is these kind of rules encoded on a chain as opposed to rules encoded into some more traditional legal structure. I'll leave it there and let someone else chime in if they want to dive into, I don't know, more strict definitions about what a DAO actually is.
I kind of agree with Auryn, and I would say, you know, the thing to add to that is DAOs have one, they're like internet native, and so they're these organization structure that's specifically designed around activity and property that is internet native. And I think one key element actually is that they have some type of shared sort of property or bank account or something to sort of govern over. And so there's this ownership is a key element of DAOs, and ownership and membership, and there's a process to do that. That's that can be encoded on chain. And then on top of that, like what that ownership enables is actually what you do with some type of like internal property. And I feel the thing with the definitions of these is that you don't want to get too. Is of course like you can have like a really good like sort of technical definition of like XYZ makes a DAO, but at the end, if you want to think about how like users and people use it, like it'll be in all sorts of ways, right? And so like you basically have these group chats that suddenly coordinate and have this multi-sig, and then they have some decision making on what the multi-sig should do, and whether you call that a DAO or not. Like at some point, if some of these like really internet native structures enable important coordination and they figure out new ways to do it, if you loosely apply that definition, it could apply to all sorts of sort of internet entities. That's how I think about it.
So if I could add some color too from the Neptune side and just generally the motivation for it. So DAO stands for Decentralized Autonomous Organization. In the very early days of there might have been talk of the DAO, which famously failed at what it was doing. It was designed to essentially be sort of a decentralized venture capital organization. But there was a lot of talk of how you could make something where instead of the top level decision-making structure of something like a corporation, the top level decision-making structure is a board, and above that maybe a court system. In a DAO, the top level decision-making structure doesn't even necessarily need to be a human being. It could be an artificial intelligence. It could be anything that you can write down in code that can determine the way that decisions are made, money is dispersed, et cetera. In practice, what that often means now is that there's a group of human beings that are voting together or perhaps jointly control some kind of multi-sig wallet. There are also different legal instantiations of DAOs, right? Like some DAOs are just a set of smart contracts. The Neptune DAO, for instance, is an LLC that has members, and that LLC decides to do whatever it does through an on-chain voting process that is codified in the legal documents that define the LLC. And actually, Auryn, Wright, who also works with open law and helped build the Neptune DAO, he was part of drafting the legislation in Wyoming that specifically makes a new type of LLC that is a DAO. So there are multiple different forms of it, but I think probably the most defining characteristic is the motivation for creating it, right? The motivation is to create something that is decentralized, that allows decision making and often allows the disbursement of money and the making of decisions. So if you were to make a new DeFi protocol or something, and you truly believe in the narrative that what you're creating is a public good that's ultimately designed to be sort of like released into the wild and exist in cyberspace without necessarily any human direct control or any single human directly controlling it, then a DAO is sort of the natural outcropping of the way that that governance system and that set of money and capabilities might articulate itself in the world.
Yeah, I think that's a good rough answer we got from our three panelists here. There's a organization whose governing rules are embedded on chain. They might have a shared pot of money that they collectively manage, and they're often internet native and they have clear goals. However, the on the ground reality of DAOs is that they function as these very slow voting democracies. And, democracy is many things, but among them is, sometimes arduous and complicated. DAOs can be very inefficient at times. So, Sam, you were actually starting to touch on this a little bit. Can we get into a little bit why an organization, particularly one that aims to be profit-seeking or one that aims to grow and compete in a capitalist environment, why they would form as a DAO as opposed to a corporation? Sam, again, you were beginning to touch on this a little bit, I think, so I want to throw this one to you at first.
Yeah, I think there are a lot of reasons. One of which is that, in a lot of these protocols, the goal is often progressive decentralization, right? So you have to start with some human beings, you have to make a company so you can pay some employees, et cetera. But the goal is eventually to cede control of that thing. So that's one reason, and I think that's why a lot of protocols are organized in that way. In the case of something like the Neptune DAO, where we're specifically a group of people that has come together to deploy liquidity in a profit-seeking motive, but also in a community-oriented motive. The reason why we've structured that way is because it allows us to crowdsource intelligence and analysis. It allows us to create this sort of on-chain intelligent organism, so to speak, that allows us to surface strategies and alpha and produce something that's greater than the sum of its parts, right? If this were just if this were like someone telling you what to invest in or what to deploy liquidity in, that has its limitations. But this is a new form of governance, and it's a new way to create a community that has a collective goal and organizes itself. So there are different motivations. Those are a couple of them. The Neptune DAO falls more in the latter.
I think there's also an element of there's a cultural element here, which is like
Shreyas, I think you got cut out a little bit there.
Yeah.
I think
I might just jump in
I think that's
and chat over Shreyas until he's back with us. But I think I was going to say something probably aligns pretty well with where Shreyas was going anyway, like the kind of cultural element here. I think one big reason that a lot of organizations choose to operate as a DAO as opposed to some other more traditional legal entity is because it's a kind of a way of embodying a shared belief about how organizations should operate, what the kind of access or permission to be part of an organization, to participate in an organization is. And I think this is one of the really big promises of DAOs. It's certainly one of the things that really got me excited about DAOs a long way back, is essentially the way that you can kind of set up organizations that are kind of non-exclusive, permissionless to enter or to exit, to participate in, and ultimately because of that low participation and kind of fluid membership, become or have the potential to become kind of much more equitable organizations where anyone in the world can participate in them, and kind of do so of their own volition because they want to participate in it, and they can kind of make that choice. And I think that kind of hints at one of the other really interesting benefits of them is that they can very easily be very widely distributed, kind of geographically and kind of jurisdictionally. You can have organizations that span multiple countries, multiple jurisdictions, multiple cultures, and again, have people kind of participate in them freely. One of the reasons that's important is because in a lot of places in the world, you don't have the same kind of access to relatively stable legal structures, relatively stable governments that you would that I enjoy in living in the US at the moment, and when I used to live in Australia. For me, I've always been able to spin up an LLC relatively easily and know that thing is going to give me some reasonable protections. But there's a lot of people in the world that don't have access to those same types of legal structures, or the same kind of confidence in those legal structures. And so a DAO provides a really viable alternative where you can create something and know that it's going to operate as it's encoded, or be reasonably sure that it's going to operate as encoded, in a way that you may not be able to creating an LLC or something within the jurisdiction that you live.
Yeah, I think just adding to what Auryn mentioned, and he touched on it very well at the end, that a DAO is kind of like a new form, maybe not a new form of LLC, but a new framework within which we can kind of coordinate what are effectively startups that are kind of cross-regional or cross-jurisdictional. There's not another suitable platform that is kind of suitable for a globally distributed startup in the same way that a DAO is. It just gives you a lightweight framework to set up a group or a project where you might have people collaborating across different countries in a way that an LLC would be too slow and too cumbersome to do, and would also not suit people equally across those countries. a DAO really is equally suitable to somebody in the US or Europe or a more developed country and somebody in a more developing region. I think that's why DAOs are being selected kind of as the go-to option in the crypto space.
To add something a little less practical and a little more sci-fi, I don't know if that's welcome or not, but I think it's important, is that human organizations proceed at the speed of courts and boardrooms and human beings articulating themselves, and DAOs theoretically can proceed at the speed of code. So it's the also in the forward-looking sense, it's sort of the merging of computation and of technology and human governance and human organization. So I think it's important to add that vector as one of the reasons why really bleeding edge technologists tend to think about these things and like them.
Yeah, great answers. Culture, technology, and geography. Shreyas, you want to try again? I think you were about to spit some fire before you got cut off there. All right, still having some technical issues, but we'll throw it to him if he does come back. I think some of those answers probably portrayed DAOs as these kind of perhaps even hippy-dippy organizations now, right? We've got some techno-futurism going. We can all align based off of shared beliefs and cultures, and anybody in the world can join. This isn't some sort of art cult, though, right? These are real organizations managing real money. I think of the total crypto market cap of 2 trillion, probably about 50 billion of that is DAO-run organizations, and of DeFi's 220 billion total value locked, the overwhelming majority of that is managed by a DAO. These are organizations that are now collectively the equivalent of a mid-sized American bank, and that happened within the last 18 months. These are very real, very big. I'm curious, though, how you guys see the current state of DAOs, and what does the landscape look like? How is the tooling coming along? And how are these incredibly young form of organizations growing? Shreyas, you look you're nice and clean video now. Let's start with you on that one.
Yeah, apologize for the internet trouble. So I think if the thing with what a DAO is it's sort of like using the word company. It's a really broad spectrum of DAOs, and so right now we have some of the large DeFi protocols, and then we have some of, I'd say maybe a few broad categories of DeFi protocols, and some of the more social community DAOs that are the DeFi protocols would be Uniswap, Aave, Compound. The social community DAOs would be like FWB, C Club, Forefront, and of course there's many more than this. But if I had to just split these two categories, one of the issues. So there's kind of a template for the type of DeFi protocol DAO, which is maybe this core team of a few people or a labs entity creates the initial technology. It's in fact almost more effective in that structure to create the technology unless we have improvements in how DAOs work. But there's a reason why Uni V3 came from Uniswap Labs maybe and didn't come from a DAO. I think that'll change eventually, but right now that's how it is. And then there's a process once the protocol does well, accrues value. They send sort of 50% or 60% of the community treasury and do an airdrop, and there's a management of kind of critical things by the DAO. And so in the protocol DAOs, there's a management of pretty much three. There's governance over three things. I think it's protocol upgrades. It's what sort of meta governance, which is kind of what you do with governance. Do you switch from governor alpha to Bravo, or do you do you reduce the uni vote threshold or something like that? And then the third is treasuries. And so what do you do with this shared pool of assets, and how do you allocate it, and what you do with it? And so that's sort of the DeFi protocol does, where they either use governor alpha, Bravo, or Open Zeppelin to sort of do manage that process. And then you have the community sort of social DAOs that are much more lightweight and bottom up driven traditionally, where they have kind of this swarm of members, and collaboration contribution is really fluid, and anyone can sort of come in, like, raise their hands and rise up, and there's a way to the voting and governance is a little more lightweight, where it's not like that doesn't matter as much. Like it's not everything is sort of not on chain. There's some snapshot votes done, but like there's sort of a core team, and there's a feeling of togetherness, and things are being done quickly. Of course, there's a bunch of DeFi protocols that are really built as DAOs, and there's a bunch of social DAOs that have much more structure. But if I had to give an overview of the landscape, like, and generalize it like that, that's sort of how I lay it out. And there's a lot to figure out, because I think on the DeFi protocol side, like, there's room to make it way more effective. There's room to make it way more actually community driven and decentralized. And on the social community DAO side, there's room to make things much more like on chain, and bring more to like actually truly DAOify things. So yeah, I'll stop there and let others chime in.
Yeah, the only thing I'd add to that is kind of one additional category, kind of broad category there, which would be the kind of more mechanistic DAOs. And this is, I would put things like the Bitcoin network or the Ethereum network into this bucket, where you say like these networks are in fact DAOs. Like it's a protocol with a rule set kind of defined by the protocol, and a bunch of kind of mutual participants in this network. They're all kind of participating out of their own mutual self-interest to kind of create and secure a network. And so these type of things, I think, can very justifiably be called DAOs as well. And so kind of taking it back to your original point about like what portion of the market cap falls into the kind of scope of DAOs, I'd say like a much larger portion than what you kind of mentioned in the lead up to this question. There's you could justifiably say just about all of it falls under the jurisdiction of a DAO in one way or another.
Yeah, I would echo that too, right? I mean, the line of what is a DAO and what is not is, I know hopefully the point of this panel is to help people understand more, so not to make it more confusing, but I do want to echo this idea that the idea that there's an alternative system, whether it's a game theoretic system or whether it's on-chain voting or whatever it is, these sort of like emergent systems that cause governance to happen in an intelligent way, is really sort of the theme of what people are getting at, I think, when they say DAO, even though we have all these very specific structures that are DAOs. And I also just wanted to point out the diversity of motivations for DAOs. So I was a founding member, I think is what they called it, of the Moloch DAO, which was made DAOs cool again after the original DAO hack. That was the first one that people said, okay, maybe we can do this intelligently and not have it be a disaster. And the goal of that was just public goods funding, right? And we just gave away money to various projects that we thought helped the Ethereum ecosystem, essentially. There's also something called like Vita DAO that I think is really cool. That is a way to publicly fund or create funding for goods around intellectual property and biopharma, life extension, like interesting domains like that normally don't get as much attention from traditional venture or tech transfer departments of universities, et cetera. So there's just a wide motivation of why you might want to organize humans together to fund something and make decisions about something that I would put under this category.
Yeah, that's a great point. I just dropped a essay from Vitalik into the chat talking about different modes and roles of on-chain governance. There is that argument that Bitcoin itself is a kind of DAO. But yeah, let's there are different thought processes regarding what level of involvement people or users of a protocol should have in a DAO, but that's getting into the weeds of it. This stuff, of course, very clearly lends itself to sort of dorm room pothead conversations. Let's talk practicalities. These organizations are managing huge sums of money at this point, and that's ostensibly what this panel is about, DAO Treasury management. So let's jump right into that. We have a pretty clear framework, I think, now of what these organizations are and the differences between them. But Auryn, starting with you, because Gnosis is critically important to a lot of these organizations right now, what's the kind of infrastructure you need to manage a treasury in a relatively decentralized way, and how does Gnosis fit into that?
Yeah, so Gnosis for the last couple of years has been building the Gnosis Safe, which has kind of become the de facto standard way to store funds, store assets, control systems in a decentralized way. And I mean, across the kind of full spectrum of decentralization. So what kind of established itself as one really standard pattern in kind of August-ish last year was essentially organizations spinning up a Gnosis Safe with a handful of trusted signers. So this would be the founding team of a project, or a handful of community members that were kind of selected by the community or selected by the founding members. The idea being just to kind of distribute trust amongst more than just one or a small handful of people. And then the other kind of piece to this really common pattern was to spin up a snapshot instance to kind of give your community a more tangible voice, if not kind of direct control over the organization's funding. And so I think like that combination has become a really critical piece to enabling DAO-like organizations, or these kind of aspiring DAO organizations. And then there's a whole bunch of different potential pathways for them to progress along this decentralization journey. Gnosis has been working on standardizing some of those, some of the way that tooling interacts to hopefully make a more composable ecosystem. So this is the Zodiac project that we've been working on, and is essentially trying to kind of rally people around the module interface on the Gnosis Safe and encourage organizations to start by spinning up a safe, and then as they look to kind of grow and change the way that their governance works, plug in other mechanisms to their safe as a module. So the idea being there that you might start out with a multi-sig. Your next step might be to spin up a snapshot instance to give your community a voice. A subsequent step might be to install, there's this reality.eth module and snapshot plugin called SafeSnap, and that basically gives your snapshot instance more direct control via an oracle over the safe. So you can actually trigger the safe to make transactions from the snapshot interface. Another kind of step after that might be to limit the scope of what the multi-sig signers are able to do. So only allow them to do things like veto malicious proposals, so they can't kind of coordinate and just run off with the funds. And then last step might be to get rid of them altogether. But again, that's kind of one of a staggering array of potential options for how you might go on that progressive decentralization journey. You might start out with a safe and then plug in an Aragon DAO to it and control your safe from an Aragon DAO. And then later you might decide, hey, Aragon's not right for us anymore. Now we want to migrate over to a Moloch DAO. So you plug in a Moloch v2 DAO on DAO House into the safe and control it from that. You might decide, hey, we want to move our governance from mainnet over to somewhere cheaper to execute. So we're going to go deploy our Moloch DAO on XDAI and then control it via the bridge module. So you have kind of decision making happening where execution is cheap, but you're still controlling assets over on mainnet, where you can plug into all of the different kind of DeFi protocols and all that stuff. And yeah, this kind of array of potential interactions is just kind of ever growing the more people start to kind of adopt this mindset of composable DAO tooling.
Yeah, that's a great answer. I think at the moment it's you know, the best that we have, and people can do very interesting things with these different modular parts, right? I want to ask a little bit about the structure of DAO Treasuries now, though. Specifically, what best practices exist in terms of managing the money and you know, making sure that these organizations are, you know, equipped to, say, handle the oncoming bear market at some point in the next 6 months. I want to throw this one to Sam. I imagine you have some expertise here, you know, sort of fundraising for DAOs and the like. But what are the strategies that DAOs are beginning to look at, and what is the state of sophistication when it comes to what ultimately boils down to a matter of portfolio management? What does that look like for a DAO?
Sure. So there's a really wide range of stuff that DAOs engage in that I think you could call treasury management. So for Neptune DAO, the whole point of the DAO is treasury management, right? Like our goal is to manage our treasury in a way that provides liquidity to to startups and to protocols like Maple, for instance, on chain, that helps them to get the liquidity that they need. We try to help founders bootstrap their protocol. So, for instance, when something initially is launched on chain, if you have Aave, for instance, and Aave launched and no one's lending or borrowing, it literally doesn't work, right? So a user could come and say, well, this doesn't work, and that they don't want that, right? So what a lot of DAOs do, or a lot of protocols do, is when they are initially launching, they allocate some of their treasury to incentivize users to come on board, right? They say, well, if you use the protocol, you can get some incentive, you can get some of the treasury from our own DAO Treasury sent to you in order to incentivize you as a user, right? And so our whole DAO is an intersection of that interplay, right? Where we're coming and providing liquidity in exchange. We're almost exchanging some of our treasury for another DAO's treasury, right? So that's one sort of strategy of providing liquidity that we do very explicitly, and many DAOs take the other side of that. Another thing that DAOs do is they are often designed, obviously, to help support the community and user base around their protocol. So, for instance, if I'm a treasury of a large protocol, I might create a fund to help people build on top of that protocol, right? Like if I'm an L2 or something, and I have this DAO treasury, I want people to be able to be incentivized to work on it. So I might fund hackathons and invest in new protocols that utilize my own protocol. So I use it as a tool to bootstrap my own existence, or the own existence of my community. And then, finally, as you said, it's a little bit like normal corporate treasury management, right? Like you have a bunch of money sitting in a smart contract and or multi-sig wallet, and the goal is to intelligently make sure that longitudinally supports your business, right? So there are lots of ways to deploy it in an immediate sense that helps bootstrap and enhance your protocol, but also there's sort of a responsibility in an ongoing fashion to make sure that the value of it stays high and lives in perpetuity, almost like an endowment of your protocol, such that it can continue to support your direction. So lots of parallels to normal treasury management, but also lots of idiosyncratic things that apply to liquidity and the way DeFi protocols work.
Sydney, one of the things that Sam touched on there that I think is particularly interesting to me is that one of the pieces of emergent behavior that we're seeing from DAOs that I think stands out relative to corporate treasury management is that DAOs can often form these kind of something a step beyond a strategic partnership. They can, quote unquote, align incentives by conducting a token swap where two different DAOs trade their tokens, native tokens for one another's. This allows the treasury to diversify, but also closely aligns the DAO with the success of another partner organization. How is, you might have some experience with this, working with Neptune, working with other organizations. How does a DAO think about these decisions, and what makes it different from, what makes this particular aspect different from corporate treasury management?
Yeah, I would say that with DAO Treasury management, so part of the way you think about it is, as Sam alluded to, when you're trying to effectively extend your runway or ensure that you kind of prudently manage the capital risk of your funds under management at a DAO, you're generally going to bucket things in terms of risk buckets. So you might have a low risk allocation. This could be, money market holdings, something like, Aave or Compound. Then you might have the low to moderate risk, which is probably where I would say Maple fits in, which is kind of like similar to a fixed income product where they're getting a higher yield, but on a sort of non-correlated source of yield. And then you might have a high risk bucket, which is probably where things like token swaps might come in, where a DAO is they're pursuing two aims. The first is kind of business development and ecosystem growth. And this is through using the token swap as a way to foster a partnership with other DAOs in the ecosystem, and ensuring that they each have a long-term alignment in the success of the other DAO. And then the other aspect of that is obviously that's more akin to a kind of equity or venture type stake. So it would therefore fall into the higher risk bucket, and therefore it probably wants to be kind of a smaller layer of the the DAO Treasury stack, if you will. So you'd probably allocate more to that lower risk bucket, then you'd have a slightly smaller amount in the moderate risk bucket, and then you'd have a smaller amount still in those kind of treasury swaps, or DAO to DAO token swaps. But that's how I would think about it. So you're always taking a holistic picture of your DAO Treasury. But it's definitely a very useful tool, and I would say it's quite different from what has come before, just because DAOs do have access to this, much more liquid form of capital through the token that each DAO holds.
Yeah, with that liquidity though comes complications, right? There's a lot of moving parts involved in these things.
Exactly.
Shreyas, I want to throw this one to you. Llama handles a lot of the reporting requirements, the accounting stuff. When you're doing token-to-token swaps, things can get really weird. What's the current state of treasury management from a tooling perspective, from keeping track of assets under management? This is sort of your field. I'd love to hear your thoughts.
Yeah, so we've worked with DAOs on like building these treasury strategies, as well as like reporting, and the reporting sort of informs the strategies that we build. And right now there's it's actually quite hard and manual on the reporting side. Of course, like data is available on chain and transparently, but the tagging of things is non-standardized. And so like if you think about, there's a wide range of treasury actions, right? That you could sort of do a token swap. There's liquidity programs. There's sort of grants to XYZ people. In each case, like the metadata is not like easily sort of accessible and tagged. In fact, Auryn and I spoke about this, and potentially integrating that when with SafeSnap, where you make a snapshot proposal and you have the sort of reporting tag right there, and that feeds into the transaction category, feeds actually into the ultimate like Gnosis multi-sig transaction you do. But I think standards around that haven't been built, and so it becomes much harder to track. But like the great thing is that what is easy to track is just the flows, and with everything available on chain, and if most actions are taken through on-chain governance, like it's easier to sort of follow through that. I think just broadly on the question of like treasury management, like I think the way I see it is like there's two broad buckets. There's one like survival. The treasury should survive and should last in depending on the goal, like forever potentially with an infinite time horizon. In some cases, the caveat is in some cases it need not be so. Like some of the more, like Auryn brought up the point of Bitcoin and Ethereum being these DAOs, and they actually don't have these treasuries. Well, if you don't count Ethereum Foundation or something, like, and in some cases maybe dissolving the treasury could be a sign of like real peak decentralization. But if you exclude that example, like in most cases for most DAOs, you want to actually maintain this treasury to fund contributors to make sure the protocol survives. And the way you think about survival is, maybe hedging protocol to token risk, treasury diversification, token swaps, things like that. And on the other side, you have like growth, which I think is probably the most important piece of these DAOs, because they all are pretty much early stage, even the large DeFi protocols, and they are clearly not spending enough to grow. And just the way you could see that is the amount that's in these treasuries and the amount that's spent. Of course, these treasuries aren't like treasury stock in the conventional sense. Like they are like kind of unissued stock in if you look at it from an accounting perspective. But it is still like a large pool of assets that's like hardly being used. And so from the growth side, of course, you can do these grants or ecosystem programs, or you could fund on liquidity mining, or you can have these collaborations with other DAOs. But none of that has really been unlocked to its fullest extent, maybe except like liquidity programs, which even I doubt how effective some of them have been. And I think one of the reasons is because the process for doing that is not designed with like conventional like sort of on-chain governance. And so I think the innovation needs to come from both the tooling standpoint as well as the tooling that enables like the actual structure of like how do you how do you make this work better? Like we have the DeFi Legos, but like how do we customize almost the DeFi Legos for DAOs and like for the use of like these treasury task forces, that maybe a multi-sig of 5 to 7, or if we don't want to go that route and we want to go on-chain governance, then like how do you actually sort of use the relevant pieces of DeFi for DAOs? I think we'll see that over the next few years. Like it's DeFi is built for a very different use case so far, and if you think of DeFi for DAOs is, of course, like in some respects like simpler, and in the sense I don't think most of the key DAO treasury actions need not be that complicated, but they need to be much more the flows need to be much more optimized. They need to be much more secure. The risk is like of primary importance. You need to make sure that you don't have like spillover risks, like one DAO affects the other DAO, things like that.
I think the other thing to consider there is just like the pace at which a DAO can operate as compared to an individual or kind of a small group of people. So like a DAO interacting with DeFi needs to be able to essentially needs to choose, for the most part, actions that are going to be the same. They're going to be the same 2 weeks from now when the decision is actually executed, and they're going to be there's relatively low risk of or kind of no ability for someone to see this kind of pending transaction over the next 2 weeks and essentially front run it and ruin the DAO's opportunities to kind of participate in something. And so I think for the most part, DAO treasury management or kind of participation in DeFi probably involves buying into various different types of assets that provide some of the qualities that that you guys have talked about in terms of hedging risks or providing kind of stable or steady kind of income or yield for the organization, as opposed to some of the higher velocity stuff that individuals might participate in when they're playing the DeFi roulette. So yeah, that's I think a really important piece to kind of consider as a DAO trying to participate. And I think this is why things like Maple are interesting from a DAO's perspective. I think this is why things like Yearn vaults are interesting from a DAO's perspective, because you can queue up a transaction for the DAO to dump a fairly sizable chunk of funding into one of these things, and the opportunity shouldn't dry up while you're waiting for this thing to actually execute. And then the other part that I think most DAOs and multi-sigs are still kind of grappling with is just like how to avoid essentially losing a bunch of funding to MEV, minor extractable value. For anyone in the audience who's not familiar, it's essentially the ability for anyone that can control the order that transactions are executed in a block has the opportunity to front run transactions, to execute transactions before or after another transaction that's in the mempool in order to extract some value out of it. And DAOs are particularly vulnerable to this because they have to enqueue transactions a lot further in advance than most other entities that are interacting with the blockchain. And then also, because of that, generally have to set much wider kind of bounds on the essentially things like slippage that they're willing to accept. And so I see someone in Shreyas in the comments here wrote that Gnosis helps with this. So yeah, there's two things I think can help with this. One, Gnosis auctions is a really great way for a DAO to sell off portions of its treasury for another asset and avoid the slippage that you might get out of trying to dump it into an automatic market maker somewhere. And then the other more recent kind of tooling that Gnosis has built to help with this is Gnosis Protocol V2, or the cow swap DEX, which essentially uses this it's a really cool network of solvers to ensure that everyone who kind of puts in an order receives the best possible price at that time, and kind of protect users from kind of sandwich attacks and various other types of MEV.
So just to add to that slightly, I mean, depends on how the transaction is executed. If it's all on chain and, there's not someone submitting a transaction, it's difficult, but, there's an emergence of private relays, right? So getting around the mempool problem of just broadcasting that I'm going to do something really slow in the future. That's an emerging problem that there are some solutions.
Yeah, absolutely. And this is something I talked to a lot of people about is like DAOs are particularly bad at keeping secrets, right? So the idea of like a private mempool or something where you can insert a transaction directly into a block. What is it? Is it Tai Chi? Is that the service that one of the mining pools provides? So like I think this is a really neat solution for individuals for solving this, but for DAOs, I think it's much harder because it's much more difficult for them to keep secrets, and much more difficult for them, particularly in the case of the more permissionless versions of DAOs, really difficult to define exactly when a transaction is going to be executed.
Actually, I have a good example of this. When Vitalik donated, I think it was $500 million to Gitcoin in Akita tokens, and the Gitcoin community was trying to decide what to do with this, and there was a lot of discussions, and all these discussions are in the public forum where anyone can see. And Gitcoin, basically, the treasury held 50% of Akita's supply, and so there were some people just saying, hey, like, dump all the tokens or like something like that, right? Now, one, like, you can't dump all the tokens. There's no liquidity for that. But then also, I mean, there's no way to, the Akita community is there in its Telegram. And so at some point, if you say you want to, dump all the tokens, by the time it goes to the process, Akita will dump all the tokens, and so you kind of lose. And so, the mechanism we had to come up with is actually very positive sum, in the sense that, you actually have to collaborate with the other community. It's kind of the only option in the prisoner's dilemma is to collaborate. And and when you have these DAO negotiations happen in public, you just have to. And it was a cool outcome at the end, but it took some people realizing that you can't actually make decisions like you make it in a corporation or something.
Yeah, we've seen a few high-profile examples of that, right? MakerDAO bailing out Auryn after their DAI vault was hacked is another great example. But we're starting to get into this a little bit already. I'm hearing that DAOs need to spend more. They need a DeFi ecosystem that's better tailored to them, using products like Maple with under-collateralized lending, using more structured or more conservative products. And we also need to find ways for DAOs to be able to use, move, and sell large sums of tokens with MEV protections. What else do we need, though? I think it sounds like the consensus is that DAOs can already compete with traditional corporations, but as we move forward the next few years and DAOs start to excel against them, what do we need to make sure that can happen for the ecosystem?
I think one of the biggest pitfalls of most DAO structures right now is the idea of kind of everyone votes on everything. It's insanely inefficient, and so more efficient structuring kind of internally with DAOs, I think, is the next piece that more will start to adopt and to start to see kind of better performance out of. There are a handful of DAOs that do this really well already. Llama, I think, is one really great example where they have quite a complex internal structure, but it allows them to move quite rapidly, make decisions with small informed groups of people, and then it gives the token holders, the community members, basically a route to disagreeing with those decisions or to kind of replacing those teams if they're not acting in accordance with kind of how the community wants them to. I also am a really big fan of the way that Colony operates. The Colony's still kind of emerging, but they're essentially focused on motions that will kind of auto execute if no one objects to them, and being able to have as few people vote on things as possible when an objection does happen, essentially keeping decisions relatively local, contextual to the people or the part of the organization that's involved with it, and then having a really clear pathway to escalate it up through this internal hierarchy or internal organizational structure, if and when it's needed, I think is a really great pattern that, again, I'd like to see more DAOs or more organizations starting to adopt. And then the other part is some of the really creative mechanism design in the space for kind of reaching decisions or having the kind of desired outcome be the result of kind of uncoordinated inputs. And so we talked earlier about the Bitcoin network or the Ethereum network kind of being DAOs, and these are these kind of mechanistic DAOs where the desired outcome, a well-secured network, is essentially the result of uncoordinated inputs from people acting in their own mutual self-interest. And I think there's a really good opportunity to create mechanisms that help DAOs to achieve their desired outcome based on, again, those uncoordinated inputs. So a great example of this is things like quadratic funding, where you say the desired outcome is a well-allocated pool of funding to public goods. And the way that you reach that is by by kind of gleaming information from the uncoordinated inputs of people contributing to the public goods that they value. And I think there's a wide open kind of design space for other mechanisms for specific types of decision making, where you can kind of, again, design a desired outcome based on much less input or much kind of lower friction inputs than everyone votes on everything.
I think just adding to Auryn mentioned, I'd go a more practical route. So I think just tools to actually access, DeFi and other products so that DAOs can manage their treasuries. So I think Gnosis has done a great job of this, with the Gnosis Safe product. It provides a really easy way for DAOs to access DeFi products to people. So it's been a huge uptick in the speed of conversations that we've had with DAOs looking to use us. But also other tools, support either swaps or trading or other things like that. So I think Enzyme is also doing a great job there. And I think these kind of practical tools, the easier that it makes it for DAOs to actually access DeFi yields or other products within the crypto native space, the better DAO Treasury management will naturally get.
Yeah, I agree. I think there's, definitely lots of good points on governance, and then just on the sophistication of what treasury management products exist, right? Like, in the normal corporate finance world, there are lots of ways, there are lots of service providers, there are lots of financial products, there are lots of things that you can use to intelligently design that stack of how you're approaching the treasury, and there's market demand. The market demand is probably pretty crypto native and DeFi native, so I think that will continue to evolve over time.
Yeah, I think that summarizes well. Like, I think smaller, more effective working groups, and many of them that are accountable to governance and tooling that makes it easier to form these working groups and implement those decisions quicker and more effectively, where you still have community oversight. There's still some mechanism for like treasury decisions to be vetoed or for the working group members to not do malicious things, but still be effective. Like something small like a token swap, right? Like if you want to do an effective token swap between two DAOs, and let's say you actually get deep into the structure, like you want to stream tokens on save layer for 2 years between two DAOs that kind of are mutually aligned, and you actually set KPIs and what you want to accomplish over those 2 years. The token swap is just one thing, but you also want maybe some product integrations or some participation in each other's governance. And maybe there's a way to reverse the swap or stop the stream if things are not going well. And maybe you have like just a group of like 2 or 3 people like monitoring the effectiveness of this. It's sort of important to have those type of structures emerge. Or I was actually working with a large DAO and exploring a real world sponsorship with like a football club, and what that how do you actually do that, right, in a DAO structure? Like you need some like you need a process to evaluate all the potential ways to spend marketing dollars, and is this the most effective ROI? Is this football club better than the other football club? Is the NBA team better? How do you actually do the negotiation? Like, for all of that, you obviously can't do it through the sort of on-chain governance. You need this working group that's kind of accountable. And so I think we'll see many of those emerge, and maybe the structure for these working groups differ a little bit depending on what the function is. So like treasury management is a little different from a grants program. But yeah, I think we'll see many more of these, and it's probably, in fact, a little more democratic in some ways, because I think token holder governance can be really dominated by some large holders. But if you think of working groups where anyone can bubble up and contributors can form reputation, like, it can actually be quite powerful for these DAOs.
Yeah, if they figure out how to do that and get that sponsorship, I expect that exclusive. I'll be very upset if I don't get that. That's really interesting. Any last thoughts here? Otherwise, we'll open it up to maybe a question or two. I think we're at the last minute here, but
yeah,
Sid, any thoughts?
No, I was just going to say, like, I think with the last couple of minutes left, perhaps if we give the floor to the audience for a couple of questions. All right, I can see there's one in there, so it's looks like it's been upvoted. So, how do DAOs hedge against on-chain risk? So, as capital becomes substantial and is placed strategically across protocols to earn interest, how do DAOs position themselves to be resistant against a hack or a smart contract malfunction? I'm happy to kind of go on this, but then I think, Sam, you probably got some interesting perspectives as a DAO that's allocating capital. But I would say it's probably risk bucketing the protocols that you're interacting with. So you can vault that's stacked on top of another smart contract that might be stacked on top of another one, say a vault that might be in convex, which is on curve. You're probably stacking smart contract risk. So maybe it's thinking about how many different protocols and how deep you're actually stacking that risk, and then ensuring kind of risk mitigation there. I suppose to plug Maple a bit, we're not really stacked on top of other smart contracts, so it's a good sort of non-correlated one. But I think, Sam, you're probably pretty experienced in there, so I might give the floor to you, man.
The answer is I think there are only a few good answers. One is you really just need to evaluate the risk, right? A lot of the places you deploy are public open source contracts. We always try to evaluate that using our technical abilities before we go into something. So that's not necessarily practical for everyone, but having a technical ability to assess that risk is important. There are also an emerging set of insurance protocols that allow you to insure on-chain activity. So probably the largest and most notable is Nexus Mutual. There are some other ones like Armor, for instance. And there's also a lot of work in the space to sort of to create an insurance product where the DAO, so for us as Neptune, when we would enter sort of, they call it a pool, right? When we provide liquidity to something, there's a way to create a separate type of pool that sort of auto-insures or self-insures the protocol. So I think what you'll see, at least an emerging sort of pattern is that there's an incentive for protocols that are launching liquidity programs to have a self-insuring mechanism inside of it that uses their own token. So how well that will work and in what circumstances that will work, I don't know. But I think a combination of insurance and just risk management in general is the right answer.
All right, I think we should wrap up there. I really appreciate your time, gentlemen. This was a very good panel covering both the introductory stuff and some of the crunchier, more exciting stuff going on in the space. Thanks, Maple, for hosting, and look forward to seeing this on YouTube.
Thank you, everyone.
Thanks, guys. Thanks, everyone, for joining the audience too. Cheers.